Hey, Wealth Builders, here's how to contribute to your accounts in order. Number one, you're going to go into cash in the bank. This is what you want to keep about 3 to 6 months in. Ideally, a high yield savings account if possible. If not, it's it's okay. You're not keeping a significant amount of your net worth here. Obviously, keep about 3 to 6 months in here. To make that simple, just take your rent or your mortgage and multiply that by either 3 or 6 or somewhere in the middle of those numbers, and that's the dollar amount you should keep in the bank at all times, essentially, and kind of aim for that. Number two, we're going to go for a 401k match here. So if you have an employer and they offer a match, this is a 401k, a TSP, a 403b, etc. If there's any kind of free money to grab, you're going to want to take that too. This is usually somewhere in the 3 to 6% ballpark. So set your contribution for that too. So you contribute 3%, they give you 3, grand total of 6. Wonderful, free money. Next in order, you're going to want to do a health savings account, or HSA, if you have one and if you're eligible for it. The reason I like this is it's tax deductible right now. You can invest it and it grows tax deferred, and then it comes out tax free if you use it for qualifying medical expenses, which there are a lot of qualifications for. So it's a really, really nice tax planning tool. If you don't have that, it's okay. You don't have to force it on that if you're not eligible. It's okay. You would then skip to the next account, which would be the Roth IRA. There is no tax deduction on the Roth IRA now, but in exchange, it grows tax-free and distributes tax-free the rest of your life. And it's mostly liquid before retirement age if you need to access it. And then lastly, you're going to want to start to fund a regular brokerage account, and or based on your tax scenario, you may want to also flip back to maxing your 401k out first. Again, if you're a high income earner, you're a high tax state, for example, you may want to max that 401k out first to realize it's tax savings versus contributing to a brokerage account at that moment. But it is good to have all these accounts funded at some point for max tax planning throughout your investing and retirement career and years. Thanks so much. My name is Justin Hodges.